Hello and welcome to the Service Operations Podcast. I am your host, 𝗵𝗶𝗴𝗶𝗀. Our guests are from different industries and functions. They will share their experience, strategies, and the changing landscape to help you take the service operations of your business to the next level. Hi Jayan, nice to have you on this Service Operations Podcast. A brief introduction. Jayan has been in the banking space for more than 2 decades. And as I know him, he is a trade finance expert. Let us know your journey from where you started and what you're doing now.
Thank you, Satinder. It's a privilege to be on the call with you. I've known you for so many years, and being in the service and operations sphere, it is indeed my honor and privilege to be on the show with you. My journey, I am basically a chartered accountant. Started off with Tata Steel in the Finance and Accounts division, moved to the Industrial Credit and Investment Corporation of India, which was a developing financial institution then, which got reverse merged into ICICI Bank. That's how my entry into the banking industry was. Thankfully, had the opportunity of working in various spheres in the banking industry while I was with ICICI Bank, including introduction of derivatives, swaps, interest rate derivatives in the Indian market. And subsequently, I moved on to trade finance, retail operations. And subsequently, I worked with a couple of other organizations. And today, I am with the fintech field, which is into the digitization and automation of trade processing in banks and corporates. So that's my journey through the banking industry in India, and it has been wonderful till now.
It has been a long journey in that sense, and also it's kind of focused around in a certain area. So trade finance is one area the focus has been around. And Jayan, as you said, digitization, very interesting, because that's like a word which everyone seems to be using and everyone thinks they are very digitized. What is your whole idea about digitization in general?
So let me take you through the in the context of trade operations in banks and corporates to talk about digitization, and to some extent how does it differ from, say, a digital transformation, which is a buzz everywhere, which everyone wants to talk about. So trade has been in existence since time immemorial, starting off from, say, 5000 BC or so. The recent trade documentation, etc., may be around 200 to 300 years back, wherein based on the shipping, etc., the documentation has been finalized. Till at least from the time that I know of, I have started off my banking industry. I started off in the trade finance department of ICICI Limited. The documents remain the same. That is around 25 to 30 years back. The documentation remains the same. The one area which automation and digitization has not touched upon in the banking industry and in the corporate is in the trade finance arena. Why is it though? Why is it so? Why is it that the technology, even after growing leaps and bounds, has not touched the trade finance till now? It is only since the last 2 to 3 years that some of the people have been talking about it. 2 or 3 points. The first is the number of documents which are there in the trade finance are significantly higher than any other transaction which a banking industry does. One may say even in the credit there is a lot of documentation, but most of these are very standardized as far as the bank is concerned. They would want it in a particular format in which they would call for. In the case of trade, there are very many documents which are there, starting from the invoice, the bill of lading, the packing list, the certificate of origin, you name it, and there are so many documents. While there have been a lot of effort, particularly by the UN, the International Chamber of Commerce, and the others, to standardize the trade document, there has not been much of a success in that area. The second thing is, as far as the format of these documents are completely different from each other. So the same invoice would be prepared by in a different manner in 2 sets of companies, and the data would be everywhere. So that is the second thing. The third thing, trade finance as such is subject to various rules and regulations, not only of the countries in which they operate, but in many a times it is also the rules and regulations of the country in which they don't operate. So for example, if I'm doing a trade with Bangladesh and the billing is in US dollars, So not only the rules and regulations of Bangladesh and India would apply, but also since the currency is US dollar, some of the regulations of US would also apply. For example, the OFAC guidelines, and there is a risk that the person who is making the payment, that payment gets stuck and the exporter does not receive the payment. So it is very complex from that point of view. The other when we talk about rules and regulations, there are various rules and regulations which are laid down. So, for example, if you look at the RBI guidelines for the master circular for imports, I tried to do it about a year back or so. There are 140 lines of compliance which needs to be made. It is if you open an LC, it is subject to the UCPDC guidelines, which is issued by the International Chamber of Commerce. There are 39 rules which have been laid down by the UCPDC. One may say it is only 39, but these are subjective, and these have been subject to various lawsuits across the globe. And there are various judgments which have been given on these 39 clauses, which are very, very diverse. So the person who is scrutinizing this document need to know about it. Apart from this, there is the International Standard of Banking Practices, which has got around 200 line items which needs to be checked when a person is scrutinizing a document under an NC. Apart from this, the RBA themselves, in their import master circular, talks about the FEMA guidelines, the Research and Development Cess Act, the guidelines issued by the Director General of Foreign Trade, the KYC guidelines, the AML guidelines, etc. So one can imagine the amount of judgment which a person would have to apply when he is in a particular trade transaction. So these were not easy. These were not at all easy. Automation had not reached a certain point wherein these could have been taken up. Now you may ask as to what has changed. What has changed in the last 4 or 5 years that suddenly you are talking about automation, digitization, digital transformation, etc. in trade? There are 2 or 3 major things which have changed as far as this is concerned. The first is, while OCR was always there, the OCR is now significantly enhanced with machine learning. So machine learning is something which has significantly helped in the trade finance processes. The second, the significant change which has happened in the computing industry, in the information technology, is the natural language processing which has come up. So today, it is possible for us to process languages, the clauses which have been in simple English, and cut and dice it, analyze it, and use it for processing. So this is the second thing which has significantly improved or come about in the processing of trade transactions. So if you ask me, the enhancement in the OCR, the machine learning, and the natural language processing, that has now changed the landscape in which trade finance automation have been taken up.
So what I'm now hearing you say is that as far as automation is concerned or digitization is concerned, I think the complexities in trade finance are far too high, primarily because, of course, it's highly regulated, but it's also highly regulated because it's between countries, I think, because of the currencies involved, and because each country may be having its own rules and regulations and other formats that need to be followed. So you're talking about digitizing in an area which is highly non-standardized. Each company does it differently, each country does it differently as far as goods are concerned, and as far as currencies and the money portion is concerned, that also happens differently. But it's very interesting to also know that it needed a certain level of technology to develop to be able to digitize trade finance.
So you were asking me about digitization. What has helped digitization? What do I mean by digitization? Digitization is conversion of the data which is available in a physical mode into an electronic form. That was a big challenge as far as trade documentation was concerned. As I said, because of the type of documents which were there, and even within the document, how the information was put in each of those documents in various places. If you see the UN, there are guidelines as to how the formatting of the document should be, but in most often than not, that practice is not followed. So the people put in the information on a particular document and on an invoice anywhere and everywhere. So conversion of that physical form in an electronic form, which I mean digitizing that information with OCR and machine learning, is what we are trying to digitize the
Okay.
entire the information per se on the physical document.
So it's a conversion basically that you're talking about. So this covers the non-standardized portion of how documents are, because it actually converts it to information. But while we were
Yes.
talking, I was just thinking there's a huge security aspect which is there in trade finance in terms of because the seller and the buyer are very far away from each other. So
Yes.
they're never very sure. Has security also improved to enable digitization?
Let me tell you in the context of the Indian banking and the corporate sector per se. Almost the entire documentation which happened in trade finance till now, or which is happening, is in physical form. There is hardly any electronic form of documentation which is coming in between, as far as documentation is concerned, between the buyer and the seller within India. Almost all of them flows through physical document. Now the one thing which has also helped in digitization of or digital transformation of trade finance is putting the information or processing of the information on the cloud. That is something the Reserve Bank of India and the other regulators across the globe are worried that whether this data should be going out to the country, because this is something which gives the information about the various businesses, about the various goods and services which are bought and sold. So the Reserve Bank of India, for example, the view taken by the banks in India is this data should be residing on the data centers within India. So while the processing happens in the cloud, the data centers would be in India, and even the DR sites on most of these data centers are also in India. The
Oh, okay.
security aspects of these, I think with the enhanced security level which is there with the multi-factor authentication, the data is secure on the cloud. There are various security features on various platforms which are available as in today. So data security is not a big issue. People are talking about blockchain as a technology,
Hmm.
wherein connecting the buyer and the seller through blockchain, etc. While there have been some instances wherein blockchain has been used to exchange information between the buyer and the seller and the buyer's bank and the seller's bank, it has not been successful as of up till now. When I say successful, it doesn't mean that it has not worked. It means that the acceptability or the usage of that platform across the country, across the globe, has been very, very limited. It is not
Okay.
necessarily restricted to India, but across the globe, there has not been much uptake on the blockchain as a platform for processing of trade finance transaction or for the exchange of information. It is still nascent stages. You've seen that email as a means of communication, it took a very, very long time before all of us started exchanging emails and we were very comfortable with it. And today, many of us show an email if suppose there is some dispute. And many a times, let us not keep the Information Technology Act, provisions of the Information Technology Act, and say, no, it has to be authorized by the provider or the platform provider for the email, etc. But generally, in a
It's
commonsensical term,
accepted.
it
Yeah,
is
accepted as
accepted.
an evidence. Yeah.
It is accepted as an evidence. So let's not go into the legalities of the Evidence Act and the Information Technology Act. That is something going further. But if I tell you that I have an email from you or somebody else, you accept it. You accept that.
You've sent it from the same address means you're the same person. We understand that this whole trade finance is very complex. The first question: so why should one do it? Is it simpler to manage manual, the physical documents? What I have, experienced and having a little bit of idea, sitting on the same floor that you were sitting, what happens is that when something is not fully digitized, okay, when it is partially digital, the hybrid model, is more difficult to execute than, any either or kind of scenario. So why do companies want to digitize something which is so complex?
Let me tell you a story of what had happened in my career about talking about how manual things are simpler than automated things. we were putting a document management system in place. That is from the document moving from the branch to a centralized processing hub, the centralized processing hub processing it, either taking a printout or on the screen, predominantly on the screen, and then processing it on our core banking platform. When we started off this exercise, of all the branches, including the central processing hub, the branches, etc., the uptake was very, very low. People said that it is very cumbersome. It is easier to take a print and to see it on the screen. If we have to do this, we will require a lot more effort which needs to be done. But in spite of that, we went ahead with that automation, and we said you start using it, and you will get a practice. Uh, Believe it or not, after about 3 years, we had a huge system outage, wherein this document management system completely failed for a day or two. So, as a business continuity process, we told the team, take a printout, process these transactions, and put it on the core banking platform. Believe me, most of the team members came back and said, it is just not possible. It is too cumbersome to do it on manually, and we were. It is so easy to do it on the system. And believe me, we have not changed much in the 3 years. If we had changed significantly as far as the 3 years are concerned, then I could give it that the platform has been fine tuned to such a great extent that people are finding it extremely easy as compared to 2 or 3 years back. That doesn't happen. There were marginal improvement, of course, but it wasn't that. So this is one is the human nature of getting used to certain things. Having said that, why should one automate at all if things are going fine? If there are no problems, why fix it? So there are two or three things. One is the cost of operations or the cost of processing a particular transaction in trade is significantly higher than any other transaction that we do in the bank, because these people who process trade transaction have to be experts. Not only they should know, but they should also have the practice of processing trade transaction. So that means they need to be experienced. That means you need to pay more cost, and the customers of the banks, of the corporates, etc., are expecting on a day-to-day basis that they bring down the cost of operation, and thereby the price which they pay for the service which is being offered, it is becoming more and more commoditized. People are not willing to give a premium. That's the first part. The second part, as I said, the rules, regulations, etc., are extremely complex, and the person who is looking at it, we don't know whether he is exercising what he is supposed to exercise, his judgment at the time of processing transaction. So we really one doesn't know, and it is not possible for anybody to put in a checklist that person ticks off all the checklist items. If 140 line items of master circular of import has to be put, and that person has to keep on taking that 140 line items, it is just not possible. So one has to depend on the human intelligence for doing it. And as we know, human intelligence is not static, it is dynamic. It varies from day to day, it varies from person to person, and it also varies from time to time, even during the same day. So there is a likelihood. I won't say that it would happen. There is a likelihood of an error creeping in, and thereby increases the operational risk to the bank, and the loss which such an operations can cause. The last thing is regulations are increasing significantly. So if we were to make a payment in US dollars, and God forbid we made a payment to somebody who is blacklisted by PFF, the money gets stuck, and God knows when will that money would be returned back. The last thing, non-compliances receive severe penalties from regulators across the globe, including the Reserve Bank of India. So, so these are the things which are the perils of doing it manually. And last, of course, but not the least, people do not want to do repetitive, monotonous jobs of processing the transaction. They look out for avenues wherein they will be able to do something more creative. They look out for avenues wherein they would be able to do significant value addition or apply that knowledge. They would want, most of them, particularly the good ones, do not want to get continue with monotonous repetitive jobs. Thereby you don't get enough skilled manpower for doing this. So it is necessary for all these things. it is necessary that we need to automate. And one of the other things which one should always keep in mind is banks, corporates, countries are looking at speeding up the entire process of trade. There is a trade facility agreement, I think, which is signed by the WTO with various countries, wherein we are also, India is also a signatory to those countries, wherein they are looking at reducing the TAT for international trade. And when we talk about TAT, it is not that there is a significant chunk in one particular area and that needs to be reduced. Governments, organizations are looking at each and every area wherein the turnaround time for a particular transaction is going high. So this also adds to it. It is not that this is a significant portion, but this also adds to the time. So we say drops make an ocean. So these are the things which can help in reducing the TAT for the customers, and that's the reason one needs to go in for automation or for digital.
It's quite interesting because this is different from the reasons why retail side goes for automation, because on the retail side it's the thought is more convenience of the customer, convenience of the employee, fully automated transactions, whereas over here the reasons are more operational in nature, and also of course compliance. It's a point that that first step of change is a little difficult process, so we'll talk about that in a while. But really very interesting, because now comes a complex product which is being digitized. Now coming to this whole arrangement of bringing it together, so it's possible that the leadership decides, yes, we want to go ahead with trade digitization in the trade finance, and I just realized that how interchangeably we use these words, automation, digitization, in that sense, what we mean is basically digitization. Now, the real challenge, as I see it, how do you bring, because there are many stakeholders to this process. So when you decide, there will be a technology, there will be business, there will be people who actually do this, the operations work. There will be many teams which are involved. So what is your experience, and how should one go about doing that, bringing everybody together?
Yeah, this is the softer aspects of digitization in any organization or automation in any organization, and the importance which is given to this is also the lowest, unfortunately, in many of the organizations. Uh, the first point is when the management decides to go in for an automation, it is necessary that we take the views of all the stakeholders in that automation. One of the stakeholders which we seldom take the view of is the employees who are processing those transactions, and yes, the users of those platforms, those who are processing the transactions, and particularly the people who are very good at it. So if I am very good at a particular skill and suddenly you replace the definition of that skill, I am the person who would be most apprehensive about the change, and not the person who is mediocre, and not the person who is not very good. So it is absolutely essential that all the stakeholders have to be spoken to. The management speaks to the product team, the management speaks to the relationship team, the management speaks to the operations head, the technology guys as to how to implement. But it is seldom that the people who are actually processing the transaction, who are lower down the order, are given a glimpse of what the system will do. My personal view, after very long years, it is not that I got this wisdom in the first time that I implemented it. It is only after a very long period of time that I realized it is best to carry them along with you. Give them a view of what makes us do this change, or what makes us bring in that automation. What are the advantages to the company? How does it reduce that? How does it reduce the operational risk? How does it reduce the regulatory risk, the legal risk, etc.? Apart from this, the most important thing as to what is in it for me and how is it that I am impacted is what the employee would look at. It is necessary, particularly in large organizations or centralized processing hubs, when there is a likelihood that the number of people who are required for processing the same number of transactions, if it goes down, there has to be a clear roadmap about what is it that the people who will be left with lesser workload would be doing during after this automation has come in. And it is necessary that all of them are taken care of or spoken to about their interest in the various avenues which the organization can offer, in the various avenues which the new automation can offer, and those are taken into consideration before implementing it. Unless and until we do that, there is very likelihood that people will jeopardize the entire exercise, and it may not be as much a success as one would make out to be at the time we entered into the automation per se. So my view, people, they have to be taken together, taken along if the automation has to succeed. So that has been my learning for so many years.
Yeah. So there's this resistance piece, as you said. I mean, why should I change? Unless I know why I should change.
Yeah,
That's very important. Yeah.
absolutely.
But what about the other teams? So how does this happen? Is it, see, one is to go and tell people what is in it for them, etc. It's like giving a, having a kind of a meeting, so to say, and do it. One is, as I heard you say, is to involve them, to actually take their inputs and involve them. When you say digitization, one key stakeholder there is technology, because, technology is doing the project. Now, what about the others? Because see, there would be some people who would be on the business side, because eventually it would impact the customer also. The customer has to do certain things differently. So the team which is dealing with the customer also has to undergo that particular change. So in your experience, which is the best way to bring all these people together, or what you would have done so that they are all on the same plane?
So one of the dictum which I try to follow, not that I have been able successful all the time, that the dictum is in God we trust, all the others bring data onto the table. So one has to look at data. If we say that the TAT would be reduced, by what time the TAT would be reduced? If we say that if the TAT is reduced, then what is the impact of the reduction of the TAT on the cost per transaction? If we say that the risk is being reduced, what is the amount of the risk which is being reduced by? Of course, it is very difficult to quantify, particularly operational risk, as to how much it is, but at least one can quantify as to how much is the company may lose if there is a problem. There would be now, with the Basel II recommendation, etc., people are having data about the operational risk losses which have happened. One can have a guesstimate of the amount of losses which would happen. The last is, if we say by reduction of the TAT and enhancing the processing work, there would be an enhancement in the business. Then what is the amount of business which one would look at? The increase in the amount of business which one would look at by this automation. The last one, apart from this, the analytics which such kind of a platform would bring onto the table, wherein you have got granular data and thereby you will be able to analyze it and enhance the business. That is something which one may not be able to know immediately, but one has to take a bet on it. Having all these things in place, even after that, it is possible that one does not have a very good idea about what would be the financial benefit arising out of that. Then there is a question of leap of faith which one takes, that whether I invest in such kind of a technology wherein the world is moving from a from a physical space to a digital space, and be ready for the changes which is happening in the world. Even nobody would have realized or thought about that the Reserve Bank of India would be going in for an EDPMS kind of a platform about 5 to 10 years back. Nobody would have thought about IceGate being used for customs and for checking the bill about 5 to 10 years back. So being ready for the future, and the last is of course the convenience for the customer, etc. So that's a leap of faith. So one needs to look at all these aspects before one takes a decision as to whether we go in for such kind of an automation. And invariably, I have seen banks, corporates, etc. When they look at these decisions at a holistic level with all the points put together, then they would go in for a digitization and an automation of digital transformation. if they look at it, if they take a very narrow view of I want to reduce the cost. It is a very narrow view. It is a now and here view. If you reduce the cost from $1,000, you reduce it to 100 rupees. I am willing to go for that platform. I think it's a very narrow view. It may or may not happen. One doesn't. One has to look at a holistic view before taking such kind of a decision, and look at this as an investment and not as an expenditure in the year in which you incur it.
Yeah, that's very important because I think sometimes, of course, in this particular case, in the case of trade finance, the risk associated, the compliance issues, those are far higher. But also what happens when decisions are based solely on ROIs, it's not always possible to quantify I mean, though we say and everyone would love to, when this decision is taken, I think particularly because this is so complex and because there are so many factors involved, the expected results could be after a longer time, because this could have this hump effect in terms of initially the cost will rise because you'll be doing a lot of parallel operations. Maybe the number of people you're using currently might continue to remain the same because of excessive checking, and then after that you'll really start seeing the results. So the patience that is required for these kind of projects to finally take shape could be longer than those which are more those with direct results.
Yes, you said it. People who take these decisions are they are taking these decisions for tomorrow and not for today. They are seeing the writing on the wall of how digitization and is impacting each and every sphere of our economy, of the world in which we live, and these are the people who take that decision to go for it. If one is looking at the returns on a quarter, on immediate quarter, that we will, I don't think that is not a feasible solution. It takes a little time, it takes a little patience, it takes corralling your forces to get the results out of this. So it also depends upon how you are able to do all these.
Is there anything more you would like to tell the listeners that they should keep in mind when they are digitizing trade finance?
I would only want to tell the listeners is, up till now, most of the people, including myself, about 2 or 3 years back, we always had that view: it just cannot be digitized, it just cannot be automated. There are options now. Look at those options, various options in the market, the companies which do it, and it is possible for the companies to digitize trade. And with the changes which are happening in the world, the faster you are there, the quicker you are there, you get the first mover advantage. We need to be ready for tomorrow, and each of the people who are working in the trade finance area need to have a thought about it, need to look at what actions they can take on this. That's my thought.
Very nice, Jen, discussing. Even I learned a lot because that's not trade finance has not been my area at all. I just have an overall understanding of it. So thank you so much for your time. Thank you for sharing your experience, and let's hope that the next time we'll talk more deeper into this entire area.
Thank you, and it's my pleasure and privilege. Thank you.